Hello, fellow traders. 'Tis I, the Rumpled One. I've been getting many, many requests to make another video, trading video. So I decided to make one only because I had something new to say. And trading is very repetitious, and that's how you learn. But after a while, people get bored, and that's part of the problem. And that's why I call this video Trading Madly Backwards. There's a song out there, I can't remember who wrote it, but it's Dancing Madly Backwards. I liked it. And maybe I can find it and post it in the notes for you. But I think it was by Armageddon, if I remember correctly. Anyway, the thing is that many of the things we've been taught as traders is backwards. Even some of the conventional or traditional trading books and instructions and teachers and lessons, they tell you that you have to go against your normal instinct because it's backwards. And a lot of times the things we tell ourselves, our self-talk, it's backwards. And what happened was, the other day I was testing a new method. Actually, maybe I was dusting off an old method. And I was trading. And let me show you the chart here. I've got scroll off. So what I'm looking to do is these dots, that's the previous candle's midpoint. So if you've been following my trading methods over the past decade, you know, probably about 10 years ago or so, I was doing a lot of work with the midpoint. Actually, more than that. It's probably almost 15 years ago, if I remember correctly. A lot of work with the midpoint. So I've got a couple of multimeters up here. This one is the candle color, and this tells me how many M1 bars in a row are green. And the previous mid tells me how many bars in a row that the close is above the midpoint or below. So, for example here, the trading trigger that I'm using is, if it closes below the midpoint, after it closed above the midpoint, then you want to go short and take some profit. Then you exit if it closes above the midpoint. So you see here, right here is where I actually entered a trade. It closed below the midpoint. See, it closed above, closed below, and so right here, I took the trade. And I was sitting in a nice little profit, and then BAM! You know, I believe my entry was here, and then in less than a minute, this is my entry. I mean, this is where price is. Okay, so basically, in the blink of an eye almost, it took away the profit. So, what was I thinking? It's like, well, I had lots of self-talk, you know. There was a lot of expletives being used, you know, starting with the letter M, the letter S, and I think you can figure out what those were. But the point is that, you see, my brain kind of went into overdrive and maybe even tilt, because you see here, we know in the market anything can happen. And one of the things that I had failed to do, I failed to put in my, move my stop to break even +1. Because see here, if I would have moved my stop to break even +1, would have gotten out. So what did I do? Well, I waited a bit, only because it hadn't gotten back up here. And then I exited with about, I think I exited with the, you know, break even +1. Only to watch price do the following. You know, continue downward. Because see, once again, this is where I was in. But you see what happened. So, the point is that, you see, there's a lot of psychology going on when we trade. And we're sometimes our own worst enemy. Because we have an inclination to want to do something. And then we might have an inclination to want to fix something. But even beyond that, in trading, we have an inclination to want to be perfect. We want to be right. And it doesn't work that way in trading. Because, see, as a programmer, I have to be right. Because if I program something and it's not right, I need to go back and fix it and make it right. There's just no room for error when you're programming. But when you're trading, you can't expect to do anything that's going to work every time. It's just not reality. I mean, here we have something that we can see, it works. Okay, here we go. Close above, close below, close above, close below. Okay, so this is the trigger. And if we took that short, we could have made a nice profit. You see here? Because the exit would be, actually what might have happened is you may have gotten out here because it closed above. Or you may have decided to ride it and say, okay, well, if it doesn't close above this one, maybe we'll stay in the trade. So your hand's on the button right there. But you could have ridden it down for a very nice trade. Just like here, you see it closed below, but then it closed above. If you entered here, you see you could have had a nice little profit. And I was looking at other things, signals and reading the price action to decide, when to enter, when to exit, what price most likely to do. But the thing is, all of those are basically guesses because nobody knows what the market's going to do next. It's just that simple. But we traders like to fool ourselves, and we programmers sometimes are our own worst enemies because we try to make these things perfect. So you might have a system as simple as this, a little method, a little trigger, but we're going to go in and we're going to try and make it better and filter it, create, and then a lot of people throw a lot of other indicators on the screen. And you're only fooling yourselves when you do that, because the market, you just cannot predict the market. You just not like that. You have to trade in the moment. And the trading is more like dancing. But so you decide to dance with the market, but you have to let the market lead. And if you just look, you can see these things. I mean, for example, you see these bars. What happened here? Price came down and price went up. Okay, well, when you see something like this, usually, what is the market telling you? The market's leading you. The market's saying, there's buyers here. Well, what happens? If there's buyers here, then it comes back down and the buyers say, there's buyers here. Okay, it's just like here. When you see something like this, what's this say? Oh, there's sellers here. So market has to come back out because there's more sellers here, right? See, there's sellers here. And then there's buyers here. And so, that's the dance of the market. And this is a 1 minute chart, and you can see how the market just dances. Now, we are live here, and you can see, and this is just the bid and the ask. And the reason I have this is you can see that the bid is on this particular one is always above this line. Okay, so this shows me this matches over here, the bid and the ask. But the point is that you see the market is telling you something. All you have to do is listen. That's all you have to do. It's not that difficult. So you see here, what's the market telling us? Well, we've got, in the 1 minute, we're below the previous mid, but we had 9 M5 bars in a row that were above. Okay, see, now we've got an M5 bar that's below. 515's above. Okay, the daily candle's green, but the hourly is not. The hourly is red. So there could be an opportunity to go short. But you see here, we closed below, but we opened above. So that's not a trade in this new system here. But the point is, there's nothing else I can do to improve this. And thinking that is a fallacy, because that's what so many traders do. They'll come up with something that's simple, and the next thing you know, it's complicated. But the market only goes up and down. It's that simple. And so the point is that you have to stop trying to do something, trying to force something, trying to fix something. Because when you let the market lead, you dance backwards. So that is why I chose that title. You let the market lead, you dance backwards. And so you see here we had a close below, we had a close above, we had another close above, so that could have been a possible long trigger. Actually, that is a long trigger. But the thing is, you can't trade in a vacuum, because if you switch over, let's just go over to the 1 hour chart. I had taken auto scroll off. I guess I should probably put it back on. Let's see, that's F8, auto scroll. There we go. And so we're looking at the 1 hour chart. And so you can see here, there's the high of the day, and that right there looks like somewhere here was the low of the day, I believe, because see, this is when the day opened. There's your gap. So this really isn't that difficult. I mean, trading really isn't, because you can read it. So once again, you see here there were what? Buyers. So price had to come down. It found those buyers again, and the buyers pushed it up. But you see here there's sellers, and you see here there's sellers. Chances are the price is going to find its way back up here. Okay? You know, so it doesn't really matter what method you're using. I mean, you could take 1 hour breakouts. So you draw a line here and here. If it goes above it, you go long. Below it, you go short. Those things do not matter. None of it matters. You could flip a coin, and you could win some, lose some. It becomes money management. You've heard these things before, but my point is that I really wanted to hit home, or drive home, make you realize with this video is you need to stop trying to fix things, stop trying to filter things, because when you do that, you're focusing on the wrong thing. You need to focus on taking your entries and then managing your money, setting your stops, and taking the money off the table when appropriate. You need to look at the context, because as I said before, you know, price is the same on all charts. I mean, the price isn't going to change if I look at a 1 hour, if I look at a 1 minute, if I look at a 5 minute. You see, the price is the same. So you see here, you have a different setup. You've still got the dots, close below, close above, or open. And then here we go, we have open above, you go long, you make money. So it's just time frames, but it's just the same data, because price doesn't change. It just depends on when you want to take your trigger. So that being said, you know what's coming. It's not what you trade, it's how you trade it. TheRumpledOne signing off.